And as we go through the presentation today, I also want to give you an idea of where we are in the marketplace. So one of the things that I started to do in roughly 2008 as part of Texas REIAs was I started to give a market update every single time that we got together. Before, I was only giving it about once every 6 months because the market wasn't changing that much. But in 2008, the market was changing dramatically, and it was very scary for everyone, real estate investors included, right? So I started to do a market update every single time that we got together, just because I wanted to know for my own personal investing, right, where the market was going, because the best way for us to know where the market is going is to look back to see where the market has gone, right? And if you think about Wayne Gretzky, and I only know one of his quotes, but I love this one because it specifically applies to real estate and real estate investing. He says, "I don't skate to where the puck is. I skate to where the puck is going to be, and I skate there really, really fast." So as real estate investors, we need to know where that puck is going to be. We need to know that the direction of that puck. We need to know what the market impacts of that puck is going to be, right? Is it going to be smooth ice, or is it going to be a bumpy road? Like, what are we looking at? And the best way to understand that is to understand where we were just over the last few months, understand where we were versus this time last year. And especially in this market where we're kind of in a little bit of an upside down market, where we were not just this time last year, which is kind of an unfair comparison. And I'll share with you guys why that is, but also know where we were in the market even 2 years ago. But I will tell you that this year will be the best year that we've ever had as real estate investors for all of Texas. Now, Dallas is having a little bit of a bumpier ride than some of the other markets that are out there. But let me tell you, no one is crying for Dallas. Why is that? Because even though the sales are down just a tiny little bit versus where we were last year, these sales are still as strong as they possibly could be, given the market and given the inventory situation that we have right now. So the full year forecast, and this is for all of Texas. So I'll go through Texas first, and then I'll break down each of the large individual markets as we go through as well. But the full year forecast for sales for all of Texas is expected to have an increase of sales year over year, somewhere between 10 to 15%, depending on which market you are in. And the 2021 year over year sales price is expected to be up 25% year over year versus 2020. Why do you think we're seeing such a big increase in the number of sales? Everyone's moving here, yeah? And why do you think we're seeing such a big increase in the year over year price? Shortage of inventory. Shortage of inventory. It's a basic law of economics, specifically supply and demand, right? As our demand goes up, was because everyone's moving here, and our supply goes down because we haven't had enough developers and builders doing their job, right? Which is to build houses. Then we found ourselves in a situation where we have a very low amount of inventory, but that very low amount of inventory has created incredible opportunities as we watch those values go up over time. So we're going to look at the October results from 2021. So for Texas, the average price was $376,000 last month, which had it up at 14% versus where it was in October of 2020. Closed sales last month in Texas were down. They were down 6%. So we've seen a couple of down months, but I'll explain why that is before anyone kind of looks at, you know, the person that they came here with and says, well, I guess it's over. Like, let's go. I'm going to explain to you this phenomenon, why this is happening right now. And if you look at our year-to-date sales versus last year, year-to-date sales are up. So January through October of 2021 versus January through October of 2020, year-to-date sales are up 7% for all of Texas, and the average price is up 19% year over year. I'm going to break down Houston, San Antonio, and Austin. Then I'm going to save Dallas for last, so you guys can see how the other markets are performing as well. In Houston, the average sales price last month was up 13% at $378,000. Closed sales were down 5%. Houston has been really just holding the rest of Texas up in terms of the sales volume. As you can see, their year-to-date sales were actually up 13% versus where we were the same time last year. And their pending sales, which is up at that top right-hand corner there, up 8%. Pending sales are our closest leading indicator of what closed sales will be next month. So pending sales being up 8% bodes well for as we finish out and get all the numbers for the month of November as we go through. The year-to-date average price in Houston was up 16% versus where we were the same time last year. In San Antonio, the sales price was up to $356,000, which was a 16% increase versus where we were last year. Sales were down 5%, and our pending sales are flat, which means we'll have a good month as we finish out November and finish out putting all the numbers together for November. But it'll be about flat versus where we were the same time last year. Year-to-date sales in San Antonio are up 6%, and year-to-date average price is up 16% versus where we were the same time last year. In Austin, the average price was $565,000, up 21% year over year. Closed sales were down. They were down 5% versus where we were last year. Pending sales are also down 1.4%. Total active listings are flat at just under 3,500 active listings. If you'll notice in Austin, they have a 1 month supply of inventory. So some of you guys are definitely familiar with the concept of days on market. So days on market is the indicator of how long it takes for a property to go under contract. So I want to differentiate between days to sell versus days to go under contract. So the MLSs typically report days to go under contract because some houses that are cash close in 2 or 3 weeks versus some houses that have financing, FHA financing, might not close for 6 to 7 or more weeks, right? But if you look at the months of inventory in Austin, you'll notice there's a 1 month supply of inventory. And you may be saying, well, what does that mean? I know what days on market means. What does this 1 month supply of inventory means? That means if we stopped listing houses today, right, based on the current inventory that we have in Austin right now, and based on the current buyer demand that we've had over the last year, in exactly 1 month, we would be completely out of an inventory of houses for sale. Some people may say, okay, that's great. Well, what's the big deal there? Well, the big deal here is that the average for all of Texas, including Austin, is about a 6 month supply of inventory. So going back in the time machine to 2008, 2009, 2010, in 2010, there was about a 9 month supply of inventory in Austin. What do you think was happening with prices at that point, right? So as inventory is up and demand is low, sometimes that means prices go down. Austin was basically flat for about 3 years, and so was Dallas. Went down for maybe 1 or 2 years, but it only went down just a very tiny little few percent. But year-to-date sales in Austin up 4%. It could not go up more than 4% when you have a 1 month supply of inventory, right? If there were more homes to sell in any of these markets in Texas, do you think they would be selling more? The answer is yes. Year-to-date average price is up 31% versus where it was last year. And then we'll finish on Dallas. So last month, the average price was up 15% to $415,000. Closed sales, Dallas had the biggest dip in closed sales year over year, down 9% with a 1.5 month supply of inventory. Pending sales are down. They're down 2% versus where we were last year. But that number at almost 11,000 pending sales, guys, bodes for a huge November as we start to round out November. And what's interesting too is November has typically fewer sales than December does. Why is that? Because everyone wants to get in the house before Christmas and or before the new year starts. So a lot of times you'll see a jump up in December versus November. So even though right now the year-to-date sales in Dallas and Fort Worth, and this really captures the entire 54 county North Texas area, right now the year-to-date sales are down 1%. There's still a chance, right, that Dallas could pull out a win versus 2020. But Dallas right now is the only market where the year-to-date sales are down. But no one's crying for Dallas because the average price is up 21% versus where we were through January through October the same time last year. So before any of you guys say it's over, I guess I waited too long, right? I'm going to go back to the drawing board. I want to really dig in and explain why those numbers are down versus where we were the same time last year, and understand why over the last few months we've seen year-to-date sales numbers being down, and why the year-to-date sales are still higher in overall for Texas, but it's starting to slow, meaning it's starting to give back some of those points that were hard earned during the summer months and the beginning part of the year of 2021. So after lockdowns were lifted in 2020, everyone said, I want to do what? I want to go and buy a house. Like, now would be a wonderful time to be able to do that. And what happened is in roughly June of 2020, a buying frenzy started that would, in a normal market cycle, right? We see January, February, March, April, May, June, July, August, September, October, no man's land, right? So that's what a typical market distribution curve looks like. Last year's distribution curve looked like January, February, March, April, May. You can't even see what I'm doing. I think it was going down, right? Versus last year. And then it was a blowout for the entire rest of the year. So that normal distribution curve where sales start to go down in August did not happen in 2020. So that's why at the end of this year, we've been giving back some of those, some of the ground that we made in 2021 for the first half of the year. Now, 2021's sales curve is looking more like what I would call a normal year in terms of its distribution curve. And I think it's a better idea, especially as we round out and finish out 2021, to really compare it to what it looked like in 2019. So I went back and I pulled all those 2019 numbers so you guys can say, okay, I guess it's not over. We can stay. Okay. So October year-to-date sales, we had 348,000 properties that closed through October of 2021. Versus through October of 2019, we had 302,000. So that was a 15% increase. The average sales price also is still very impressive, 2021 versus 2020. Even more impressive when you look at the 370,000 2021 versus the 291,000 in 2019. So how many of you guys have owned property for more than the last 5 years? It feels good. Yeah. How many of you guys are getting your tax bill and say, what? So how many of you guys are crying a little bit because of that? Let me tell you, I took a poll and nobody feels sorry for you. Okay. No one feels sorry for you, right? Because those values are going up. People are refinancing, some cases, a cash out refi to be able to take some money out to do, hopefully invest in appreciating assets, not depreciating assets. But that's been a beautiful occurrence just even since 2019. And again, that being said, the year-to-date numbers are still up 7% versus where we were in 2020. So again, more of the story is all is good. We can all rest and feel fine about that. So I wanted to be able to share that with you. So that is our market update. We try to give not just the data, but also the insight behind the data. Again, because we don't just want to know where the puck is, but we want to know why the puck is where it is and where it's going. So I hope that helped you guys as you're considering and really understanding the market. I think it is, and this is the left brainer in me that's talking, but I think it's really key to understand where the market is, where the market is going, what strategies you use as a real estate investor based on that in order to be successful. Because I've seen investors come in at different parts of the market and just get strategies that work in those parts of the market and ignore all the rest. And then the market comes and does what? Everybody has a plan until you get punched in the face, right? So I don't want to see any of you guys get punched in the face. I want you to be strategically agnostic so that you can maneuver, again, no matter what the market hands out to you guys. So that is the market update for today. And also want to do a special announcement as we round up my part of the presentation tonight. And then I'll bring up my husband so you guys will get to know a little bit about him and understand some of our investing philosophy that has allowed us to not have to update our resume since 2003. And that is this. So as the last 2 years has really given us an opportunity to rethink our business, has really given us an opportunity to rethink our lives, has really given, and I'm sure that's the case for all of you, and has also given us an opportunity to rethink how we help people as part of the Real Estate Investor Association. So the way that a typical Real Estate Investor Association is organized, and the way that we organize our Real Estate Investor Association was, hey, we meet every month, come back every month. We go through about 3.5 hours of tribal knowledge. So in about somewhere between 1 to 3 years, you'll have everything that you need to know to be a successful real estate investor. Pretty efficient, huh? No, terrible. What were we thinking? So we were following, the cognitive bias right there, right? Was, well, this is the Real Estate Investor Association model. Follow this model. And over the last 2 years, we had an opportunity to rethink that. And basically what we said is, I don't think anybody in here wants to get started between 1 and 3 years. I think all of you guys are thinking, well, now tonight is good, right? So, we're not going to do an all night lock-in tonight, but we do have some special real estate investor training set up for you all so that you can get the knowledge faster to, number one, not make mistakes, because Warren Buffett's my favorite rule of investing is his rule number 1, which is what? Don't never lose money. And his number 2 rule, see rule number 1. That's right. So we want to make sure that first you don't make mistakes. People always come to me and say, Shnoa, you're a founder of Texas REIAs, like, show me how to make some money. So, well, that is my job. And I love to do my job, but hey, let's make sure we get educated so we don't lose money, first of all, right? It's all about that due diligence, that understanding. And as part of that, one of the things we're able to do as part of Texas REIAs is to bring you a workshop. So we've got a 3-day workshop plan for you guys, and it's an all weekend lock-in, I guess I'll say, where we'll talk about the 12 strategies that we've been using over the last almost 2 decades to not have to update our resume. We're also going to talk about being able to find off-market deals. So what does this look like? Are your deals on the MLS? No. Let me tell you, last month, the list price to sales price ratio in Texas was 101%. So let me ask the question again. Is your deal on the MLS? Not unless you want to lose money, right? So that means if a house was listed for $100,000, there's no such beast right now, but just kind of follow the example. If it was listed for $100,000, it sold for $101,000, right? Your deal is not on the MLS, but your deal is in 65 other places. So we'll share with you, and as Phil comes up tonight to do his part of the presentation, he's going to share with you where many of those 65 different places are, and then we'll go into even more detail as we get together for our workshop. We're also going to give you what we call the exactly what to say for the real estate investor. So I told you guys that I am a left brainer. I told you guys my husband is a left brainer. And how that can benefit you guys, right, is every single seller that we've talked to, we've done what? We've documented the conversation. We've documented both what works and what doesn't work. We've documented all the objections. We have experimented with the different rebuttals to those objections until we've gotten it perfected, right? That's what left brainers do. They're a little neurotic about that kind of stuff and figuring those things out, but that's what we've done in our business. We're also going to introduce you to several other real estate investors that many of the investors get to partner with. I told you that part of my Thanksgiving break, we got to spend some time with some other investors that we invest with, and we got to meet up in Costa Rica and do some masterminding over the course of this past weekend. We'll also talk about access to funding. So a lot of people have already shared, like, I'm a little nervous, like, how do I get the funding for these deals? And even if you have money, that money runs out really quickly as a real estate investor, right? Because real estate investing is the most capital expensive business that there is out there. So we're going to share with you those different ways that you can get access to funding. And we're going to help it be an experiential learning experience. So what that's going to look like is, as part of the Real Estate Investor Association before, what we would do is we'd all get in a bus, and we do a property tour. And what that looked like is we would get in a bus around, 3:30, and we do training in the morning, get in a bus around 3:30 in the afternoon, which means we would sit in traffic for about 2 hours, right? And then we get to go and see, 1 or 2 houses, and then everyone would be exhausted when you got back. So what we're doing now, again, the obstacle is the way. We're bringing the property bus tour to you guys so you can sit in the comfort of your chair, not be in traffic, and be able to see multiple projects that we're invested in or other members of Texas REIAs is invested in. And we're doing this class both live and online. So I know some of you guys can make it to a live meeting. So I want to applaud all of you guys for being out here tonight with us. But some of you guys may not be able to come in person. So we're doing it both live and online. And then we're also, because it's been such a crazy year, we're doing it for free. Hold your applause. It's really no big deal. Thank you. Thank you. Thank you. Thank you. Thank you. Some I can tell who my procrastinators are in the back because they're like, I'll clap tomorrow. Okay. So it's free. So why are we doing it for free? So we used to charge, March of last year kind of changed that, right? So we were able to do everything on Zoom. This year we are continuing not to charge. So at some point we're going to go back to charging for our regular membership. We're going to go back to charging for this. But we kind of felt like my rule when I set this rule out, and I might be kind of kicking myself for it, but I basically said, as long as people are still wearing masks, we're going to do this for free. I didn't know that people were going to be wearing masks for almost 2 years. But at some point, I think we're not going to be wearing those. So that's the point where I've told Phil that we're not going to do it for free anymore. But I want to go ahead and give you the dates too. So we'd love to make you educated this year. You've got a shot at that this year. So we're doing a Texas-wide online-only class, December 17, 18, and 19. So this one's just online. We're doing a live class in Dallas on January 7th, 8th, and 9th. It's both live and online. So we've got the technology to be able to do that. And for those of you guys who can be in Houston or have family, relatives in Houston or any of these cities, right? We're doing another class because we want to make it a blowout 2022, January 14, 15, and 16. So you guys can get there by going to texasstarterkit.com. So some of you guys may be familiar at this point with the concept of QR codes. So for those of you who are, you can pull out your camera, you can take a picture of it. It's going to pull up your Safari or your internet browser. If you don't know how to do that yet, no worries, just pull up your internet browser and just go to texasstarterkit.com. We're going to ask you a couple questions just to figure out where you are in your investing right now and ultimately where you go. So one of the things we've been doing as part of the Real Estate Investor Association is helping you guys build your blueprint. And because we are left-brainers, engineering, MBA background, we're able to do that just by asking you a few very specific questions, right? Think of it as a personality test for a real estate investor to be able to help build out your plan. So after you fill out that form, we're going to actually email you a plan. We'll also ask you which event you want to sign up for, what training you want to sign up for so that we know what to RSVP you for. And then we'll ask you if you guys would be willing to help us build our online presence and join our Texas REIAs Facebook page. This is where you'll have an opportunity to network with other real estate investors, be part of a larger tribe, which is this group. We've got about, since we've been really working on growing that, we've got thousands and thousands of members on there. So it's a great place to be part of the Texas marketplace for doing that. So love to have you guys there. Again, just go ahead and fill out that form. We have a couple little bonuses for you tonight as you fill out that form. So I'll let my husband Phil share those with you as he starts his presentation. So just want to thank you all for having me here as we go through the presentation tonight. I hope what you learned was something that you can put into place in your own business in the same way that this was something that we've been able to put into place in our business. Everything that we've learned joining that first Real Estate Investor Association. We would not be where we are today if it were not for that, walking into that first Investor Association It was there that we got the tribe. It was there that we got the contacts, the contracts, and the contractors, right, that made us successful. And continuing to do this, even though we're in a position in life in terms of income, in terms of wealth, where we don't have to, we do still feel the need to be able to pay it back, to be able to pay it forward. And this is how we do that. So welcome everybody to our tribe. And will you guys all please give my husband